Forget what you think you know about Pyth. While the price chart looks like a graveyard, the data says otherwise. Billions in volume. Real integrations. And the chart? Primed. What if I told you the market has been ignoring one of the most powerful data infrastructures in crypto? What if the whales already know what's coming next, and they're quietly loading up while retail sleeps? In this video, we'll dive deep into why Pyth might be the biggest sleeper play of 2025. From brutal price action to record-breaking adoption, real-world finance disruption, and one of the most technically bullish setups I've seen all year. Stay tuned, because by the end of this video, you'll know exactly why this so-called dead token is anything but. Let's start with some cold hard truth. HC Capital dropped a reality bomb. Of over 20 hyped airdrop tokens, only one has shown positive returns. Hyperliquid. Everything else? Down. Bad. Some by over 90%. Pyth? Down more than 57% from airdrop price. Movement, WorldCoin, Arbitrum, Eigenlayer, all in the red. The reasons are obvious. Inflated airdrop valuations, zero token utility, and no sticky demand. Most of these launches were VC exit pumps disguised as community rewards. The market punished that, and Pyth got thrown into the same basket. But should have? This is where it pays to zoom out, because price is not the full story. Despite the drop, Pyth isn't just alive, it's thriving under the hood. This protocol processed over $75 billion in monthly traded volume. That's not just healthy, that's dominant. It's a number typically associated with entire exchanges, not a decentralized oracle. They've secured over $14 billion in value, with 65 million cross-chain updates, 1 million plus entropy requests, and over 100 verified data providers on board. In March alone, 17 new dApps integrated with Pyth. That includes lending protocols, perps platforms, and cross-chain asset bridges. And they didn't stop there. 3 new blockchains came online: Atlas, BitTensor EVM, and IOTA. Even giants like StoneX, a Wall Street-grade data provider, are in the mix. Let that sink in. While everyone is distracted by macro politics, Pyth is quietly becoming the standard in oracles alongside Chainlink. Want to know how serious this is? Grayscale, yes, the Grayscale launched a dedicated Pyth investment fund. That's massive institutional validation. This isn't a random exchange listing or influencer tweet. This is legacy finance placing a bet on oracles. And what exactly are they buying into? Over 1,000 price feeds, 570 plus US equity feeds. Yes, including Tesla, Nvidia, SPY, Coinbase, the works. Real-time data that updates in 1 millisecond thanks to Pyth Laser. Let's pause on that. 1 millisecond. That's not DeFi-level speed. That's Wall Street-level execution, but decentralized and globally accessible. Game Changer doesn't even cut it. And while other oracles are stuck playing catch-up, Pyth is building tools that TradFi institutions and DeFi degenerates can both use. That kind of dual demand, that's how empires are built. Still not convinced? Let's talk LeverageX. 311 markets, 80 plus stocks, all tradable with up to 150x leverage on-chain. This is DeFi with real-world assets, and Pyth powers every single feed. Apple, Tesla, Nvidia, even SPY and Coinbase. All streaming prices in real time through a decentralized Oracle network. And now they're expanding into emerging markets. The latest? US dollar and Chilean peso. That's right, real-time, on-chain pricing for the Chilean peso offshore market. A market underserved and often ignored by legacy systems. Pyth is removing barriers, bringing access where there was none. No subscriptions, no centralized gatekeepers, just clean, reliable real-time data. And while most projects brag about utility with gimmicks, Pyth is tackling real-world inefficiencies. All right, let's get technical, because even the best fundamentals need a good entry. Pyth just completed a textbook bounce off the lower trend line of a descending channel on the weekly chart. This isn't noise. It's classic accumulation. Volume is building. The VRVP shows heavy buyer interest around 10 cents and 13 cents. That's our zone. The Harsi Heikinashi RSI just flipped from oversold territory, historically a bullish signal. Here's what I'm watching. First major resistance, 35 cents, then 76 cents. Break that, and we're looking at $1.82. Max euphoria, $4.60. Now, I'm not saying we moon tomorrow, but structurally, this chart is set up for a major move. And unlike meme coins, Pyth actually has something to justify a pump. This is where smart money enters. Let's bring this home. While the market's been crying about red charts, the foundations of DeFi are being rebuilt. Not in hype cycles, but in quiet innovation, the kind Pyth is spearheading. This is exactly the kind of setup I look for in my long-term strategy. Deep retracement? Check. Strong fundamentals? Check. Real-world growth and usage? Absolutely. That's why I wrote my eBook, DeFi Financial Freedom, the ultimate beginner's guide. It's for people like you who want to stop gambling and start building. Inside, I break down how to farm yield without rug risks, the safest ways to stake for passive income, how to catch legit airdrops, not just VC exit pumps. It's $4.99. Link pinned in the comments. And it's helped a ton of viewers already. Make this cycle count. Here's the truth. Pyth is one of the most misunderstood tokens in the market right now. But those who do the homework, who follow the fundamentals, read the volume, spot the trends, they're not scared. They're accumulating. If you've watched this far, you are ahead of the curve. So what's next? Smash that like button if this gave you new insight. Drop a comment. What's your price target for Pyth? Subscribe so you don't miss the next breakout play. And go watch my last video. It connects perfectly with this one. Stay sharp, stay curious, and always follow the real data. This is Crypto Yield Pro. Let's build together. See you tomorrow.